Greetings and welcome to this case study. So this is what it looks like on the 4 hours time frame when we zoom in. So I will go to a lower time frame to show you what the chart looks like. So this is the 15 minutes time frame, and as you can see on the chart, this is surprisingly lot. Let me talk about what happened here. This is where we had a change of character. I will zoom into this zone so you'll see what it looks like. This is the 15 minutes time frame. So we had this break there and this demand mitigation. They had a change of character. So for this mitigation, markets use this imbalance as our liquidity to mitigate this point, and if you use this area here, this region here as our inducement, mitigate it. So, but the major one is this one. We mitigated it and it broke this high. After breaking this high, before breaking this high, you had another change of character here on the 3 minutes. Market broke this high, came down, mitigated this demand before moving. That's what it's all. So this is exactly what happened on the 15 minutes. So I'll go through a lower time frame to tell you more about what happened in this region. So as you can see on the 3 minutes time frame, this is the place market broke on the 15 minutes. This is where we had a change of graph 15 minutes. So within this trend here, we also had another change of character, which is here. Let me zoom in. So here we had a change of character. After market mitigated this demand, we had a change of character here. Markets use these areas as inducement to mitigate this particular demand zone. That was what the inducement market used to mitigate this demand zone, and off it moved. Market broke this high, then it came up and it broke this high here on the 15 minutes. Just one straight move. Then market started coming down slowly into this demand zone. Now in this 3 minutes, we had a refinement here, and that is this candle. Now you might ask, why didn't I just take the refinement? And this is what actually happened. This 15 minutes, this is the whole zone. In the 3 minutes, this is a point of interest. This is also a point of interest. This second one here is also a point of interest. Now the thing there is that there's an imbalance here. So that's why I covered the whole zone. We cannot really control the market, so we don't really know. Market might still come down to this point. So that's why we extended it. We used the 15 minutes point of interest. So assuming this candle came into build this imbalance and came into the zone a little bit, maybe by a week. Let me show you an example of what I mean. Something of this nature. Over this whole area. Show it clear. We'll cover this whole area. Take the whole part and this other part. But since there is a refinement here in the market, since there's an imbalance here in the market, we'll cover the whole zone. So covering the whole zone gave us a total of 1:50 risk to reward ratio. So assuming we refined it to that point, what will it give us? What it will give us is 1:50 risk to reward ratio. Let me refine it. So assuming we refined it, this is what it will give. To give us a total of 1:126 risk to reward ratio. That's what it would have given us if we refined it to the 3 minutes. But since we are going with the 15 minutes, we had a change of character here. As you can see, we had a change of character here. The markets went up immediately, leaving a gap here. Taking out this high, high here. This external structure high. So we took it out and had another point of interest here where we can trade for, and this is the demand. This is the demand zone. So that's it. So that this second trade gave total of 1:36 risk to reward ratio. And for our take profit is this supply here. I'll go to the 15 minutes to show you clearly. So that's it for this particular entry here. You can see where we took this one from, where we took this other one from. I'll go back to the 15 minutes time frame. So this is the 15 minutes time frame. Now this is where we took our profit for this trade. 1:50 raised to the world and 1:36 raised to the world. See you on the next one, which is this and this other one.